Well, good morning, everyone. It's December 9th. It's a Monday, and the year is almost over. Let's talk about the week ahead and what we can expect. It's going to be a busy week. Funds are back in. There's no holidays right now. We're in between holidays, so there's some pretty active action. We've got the FOMC meeting starting tomorrow with the announcement on Wednesday. Usually when that happens, you can expect a subdued market action on the first 2 days of the week. So I'm not expecting a lot of trading action. As a matter of fact, I told you last week that I'm expecting the S&P to move into some type of a congestion pattern, a flag, a wedge, a triangle. It's too early to tell if it's going to be ascending, descending, or symmetrical. But right now, it looks like we're going to be in a hurry up and wait mode, at least till the FOMC and maybe a few days later. Now, I don't think the FOMC is going to have a lot of impact, or the press conference. Why? Because we have a Fed that loves to tell us, they love to predict world events. Usually, Fed likes to keep things close to the vest, not this Fed. This Fed will tell anybody what they're thinking, even if they're going to change their mind. So they like to give projections 9 months ahead of time, which is really unusual. I mean, really, really unusual for a Fed. But on top of that, Fed lowered rates 3 times last year. Economy, the jobless report last week, Friday, was off the charts, blew everything out of the water. I think we had like 50,000 less jobless claims. The number was super solid, which is why the market rallied on Friday. So the big report, I don't think it's going to have a lot of leg to it. I don't think it's going to have a lot of power to it. I don't think the bond market's going to react to it. I think the Fed, you see this trading action here? The Fed, now keep something in mind. The Fed has been lowering rates. Rates go down, bonds go up. Remember, bonds and interest rates are inverse. They trade inverse. So if bonds go down, rates go up. Fed lowered rates not once, not twice, but 3 times. Look at the bond market. It's not going up. Every time the Fed lowered rates, bonds should have gone higher and higher and higher. They've gone lower and lower and lower. That's telling us that the bond market is no longer reacting, that it's already priced in, that the interest rates, that lowering rates is not going to save this economy, and the Fed rate has priced in the majority of the rate drop because interest rates are actually going up. Fed is lowering them, but they're actually going a little higher. Look at the 30-year rate. This is the long bond. It's going down, which means Fed rate is going up. So the Fed doesn't have a lot of power, and therefore I don't think this report is going to have a lot of power. I don't think it's going to have a lot of strength unless the Fed starts saying we're going to have to lower rates again because economy sucks, and they're not going to do that. Why? Because Friday's report, jobless report, was literally off the charts. The numbers were just amazing. Unemployment is really low. We're not at a 45-year low. We're like at a 55-year low. So that's the big report first half of the week, and I'm expecting a subdued market, a congested market till that happens. S&P slightly down. Again, not expecting a major catalyst unless China and U.S. work things out. Furthermore, if you look at the put-to-call ratio, it's been really choppy, and it looks like it's moving towards overbought territory. It's not there yet. It's at 0.88, but anything below 0.85 is telling us that the markets are getting slightly overbought. So we're starting to move into that area, and the Russell, the small caps, they huffed and puffed. They made all-time highs. They broke out again, which is very positive, and it's telling us small caps are looking forward to a resolution of this trade war. They're actually seeing it now. So if we don't hear bad news from Trump, I'm expecting price action to remain near this level. But we opened up and dragged all the way down, and it looks like we're going to break the low and open lower. Again, I'm expecting for the next few days a tightening, congested type of a pattern, unless something drastic happens, like Trump says the deal is off the table, or he says the deal, we're making really good progress. If he says it's off the table, we're going to go down fast. If he says we're making really good progress and it looks like we're going to resolve everything on the 15th, which is just end of this week, beginning of next week, I can expect the Russell to rally. So till that time, till we hear something, it looks like we're going to be just kind of sitting and trending, not trending, but staying choppy, waiting for the market to give us some news. Right now, markets are just becoming slightly overbought. There's no catalyst on the table. Most of the Fed news is already there. The Fed's going to tell us, hey, economy's looking great. We're not going to lower rates right now. And everyone's going to say, yeah, we kind of knew that already. So not expecting anything there. But again, the Fed likes to wait. Now, the big report for the week. Pay attention to what I'm about to tell you. This is big. This is why you guys listen to me. You see this retail sales report? It's coming out on Friday. And this is a monthly end of the retail sales report. I want to show you something really cool here. You know those end of year rallies? Those end of year rallies that are caused by the market, that Santa Claus rally, everybody likes to call them. Well, let me let you in on a little secret. Usually those rallies are caused by really, really positive retail numbers. Retail makes up a little bit over 70%, between 70 and 75% of the entire U.S. economy. That's right. When you hear the GDP report, that's between 70 and 80% is retail sales. So retail sales become really, really important at the end of the year. And what I like to do at the end of the year is I like to follow the retail sales number very closely, and I like to look at stocks that are making all-time highs on my relative strength list. This is my relative strength chart. This is called CSI, Cumulative Strength Index, and I use this to analyze strength and weakness. And look at number 1 stock, Tiffany's. Look at number 4 stock. This is the top 500 stocks. Michael Kors, another retailer right there, right? We're getting some retail action. Tiffany's just was bought out by Louis Vuitton, my wife's favorite brand, don't ask. Michael Kors, another purse company. These are luxury goods. Let's see if there's anything else. I like to do this before Best Buys. That's a retailer. They're doing really well. Let's see, anything else? Ralph Lauren. This is really positive, folks. CVS. All these are retailers. And remember, this is not 100 top stocks. This is top 500 stocks. So anything in the top 50, anything on this page is really positive. Nordstrom's, Target, things are looking positive. I like what I'm seeing as far as retail is concerned. So if retail numbers continue to outperform, and if we continue to start to see retailers on our list, and I'll keep you updated, especially last few weeks of the year, it's looking positive. It looks like if we resolve China, and if retail, I know there's a lot of ifs here, but if we resolve China within the next 2 weeks, and if retail can remain within the top 10, we could see a really nice end-of-year rally. Now, I want to show you something else since I'm already here. You see the stock QRVO? This stock provides chips, semiconductors, to the iPad, to Apple, iPad, iPhone. So when iPad sales goes up, it has a lot to do with QRVO. It's a really cool stock. I believe this stock was one of our 5G stocks of the month. Really, really good stock. And why I'm bringing this up right now is 5G. Folks, 2020 is going to be the year that 5G goes mainstream. Now, if you're a long-term investor, it's going to be tough out there. Most stocks right now, if you look at this chart, they're overbought. I mean, look at this. We're almost at overbought level. Anything below 0.85 means we're overbought. That's not positive. That's negative. Look at this thing. It just continues trading higher and higher. It's actually up 3% overnight. I told you guys to buy this stock about a week ago. It's up about 5% since I gave you heads up. I gave you the heads up right around here. But anyhow, there's one group of stocks that's going to deliver double and triple digit gains. There's no question about it. Even possibly quadruple gains. I'm looking at these things and it's amazing. I'm just looking at the tickers. Now, most of these opportunities, just like Qorvo, are related to the 5G technology sector. This is going to spark a major technological revolution, and it's going to make massive wealth for savvy investors in 2020. Just like anyone who listened to me on this Qorvo stock, you're up. If you bought it on Friday, I think I gave it to you on Wednesday, Thursday, and Friday, you're up. It's making money. So billions are being invested in this technology right now. And it's being fueled by really rapid earnings growth. So there are a few companies like it, and I'm going to be giving them to you. If you want to learn more about 5G stocks, if you want to learn more about stocks like this Cuervo stock, I think I'm mispronouncing it. I think it's Cuervo. Cuervo, not Cuervo. Cuervo is tequila company. Cuervo. Click the link, follow the link below, learn more about 5G stocks. Folks, there's a lot of money in these 5G stocks. You got faster internet technology. Internet's going to get faster. All of this faster internet speed will make up of stocks that are using faster chips. So it's a technology that feeds off another technology, and it's just a vicious circle. Just like when we had personal computers, just like when we had iPhones and iPads, just like when we had 4G, self-driving cars, robotics, AI. You can't have any of that on a real working level without 5G. No 5G, no self-driving cars, no instant communication. So 5G is the biggest sector, and I think this is going to be one of the stocks. And again, it's already up pre-open. This stock is just screaming. But anyhow, take a look, follow the link below, learn all you can about 5G. Check out the names of my 5G stocks. This is just a taste. Talk to you guys soon. Don't miss out. Don't procrastinate. I was talking to a market wizard last Friday. Friday night we had dinner, or Thursday night we had dinner. And we both agreed that the biggest impediment to success is procrastination. Attitude and procrastination, and they kind of go hand in hand. Don't miss out. Learn more about 5G. Educate yourself. Become successful. Learn about my best 5G stocks and my 5G report. Follow the link below. Do it now. Talk soon. Have a great week. I'll talk to you guys tomorrow, maybe even later today.